Hello and welcome to this Monday's weekly morning market briefing. We've got a lot to talk about, but firstly, German home building collapse threatens wider economic damage, as well as that the US warns Israel against hospital firefights, and as well as that Iceland does declare a state of emergency as it braces for a volcanic eruption. We've got lots to talk about on the charts also, though, with lots happening on the economic calendar, throughout this week, with lots of inflation data coming out. So that's going to be very important to cover. Before we get straight into it, make sure to subscribe. But the first article to talk about, of course, is German home building collapse, which does threaten that wider economic damage. Now, across Germany, home builders are facing such a sharp reversal in their fortunes. The downturn in residential construction is threatening to have wider damages in the EU. Now, we know Germany's been struggling with their economy coming out of COVID, and that's primarily actually been in relation to, falling demand along with higher borrowing costs. The ECB have consecutively raised rates, I think 10 times up until the level of 4%. They've now held off on, moving rates up or down for 2 meetings now, but that 4% mark has really begun to take a toll on, the general German consumer, with consumption, especially within, cars, the automobile industry being hit very, very hard. And as a result, largely damaging, the auto manufacturing kind of industries within Germany, which is known to be so strong and so big. As a result, we've seen these wider issues relating to, Germany's economy, which in turn actually has been weighing down the rest of the Eurozone economies due to the issues which Germany is facing as a result of these higher borrowing costs. With many firms, house building firms, declaring insolvency, further affecting the housing affordability crisis in Germany. Now, the federal government has intervened with state legislatures, unveiling a package of measures aimed at speeding up house building by cutting red tape. But with, German builders now facing a perfect storm as a result of a decade-long, boom fueled by strong demand, cheap credit, and low raw material costs, the worry is the rollout will be too slow. And this is what we've seen in many developed economies coming out of COVID, is this issue now of, with rates going up, there no longer is that, cheap credit, cheap money, which many industries were thriving off and building a lot of their industry and the way they found their business, because much of the demand for that business was credit driven, and a lot of the production side of that business was also credit driven. So you raise those credit costs, we're going to see a downturn in that industry, of course. And construction's being hit arguably the hardest, or one of the hardest, due to those raw material costs rising. We know that raw material costs were rising as soon as we started to emerge out of COVID, and then were further hit harder with the geopolitical crisis, especially within Russia and Ukraine, with the oil crisis sparking other commodity issues, and all those sanctions kind of also added on to the issues for commodity prices. Now, rate hikes are also pricing out buyers, and there's been a loss of confidence in the residential property market, with it now being among the worst performers in Europe, with raw materials now more than 40% more expensive than pre-pandemic levels, and credit has become increasingly expensive following 10 straight rate hikes. So that's what we were talking about primarily. But obviously it's very worrying for Germany, as they're having arguably the worst issues with them auto manufacturing industry, which is their biggest, or at least one of their biggest industrial kind of sectors. As well as that, they're also now having these issues with their home building industry. So it's really not looking for the European kind of Eurozone economy. Now, house prices were down 10% year on year in the second quarter, with building permits sinking also, and in October 22.2% of companies reported cancelled projects, and that is very bad, considering how projects, are very long term. And, when we start to see projects being cancelled that may have been worked on, for the past 1-3 years, that's where we really start to note some key issues within the economy, and especially within the house building industry, of course. And this is all contributing to an outlook of Germany falling to the bottom of the IMF's rankings of leading economies. And I remember when we went over kind of GDP predictions by the IMF, I believe, going into next year especially, Germany was one of those lower level contenders. And many now want the government to intervene in what house builders see as a market failure. Some, however, could argue that this is a key central bank failure. You create that level of cheap credit, and then you could also argue it's a government failure by, instituting an entire, complete lockdown on the entire economy, and, individuals being able to go out of their houses. And then you also, add on the other economic measures which, messed with demand during, COVID, and then you implement sanctions following a geopolitical crisis. Arguably this isn't too much of a market failure and more of a government failure, but that's for others to argue, of course. But that's all to talk about on the German home building front. Definitely keep your eyes on this, as Germany is facing great economic issues at the moment, and as the biggest economy of the Eurozone, any effects to kind of their economies will have the greatest effect on the ECB's monetary policy. So it's so important to keep in contact and understand how the German economy is doing. Next to talk about, though, is the US warning Israel against hospital firefights. Now, the US has warned Israel not to fire on hospitals in Gaza and risk the lives of innocent patients. And this comes as IDF troops and Hamas militants fight close to one of the key Gaza's hospitals. Now, this obviously is all following the issues, the massacres and conflict which ensued following the October 7th massacre. And as we've seen, this ground operation has been embarked on by Israel, sending in its troops, sending in its tanks, and continuing its aerial bombardment. It's now almost created a complete encirclement on the Gaza city. It sort of has, but it's kind of closing off and kind of creating a pincer, meeting both ends, north and kind of south, on the Gaza coastline now. And once that's established, the Gaza city will be completely encircled. It's already cut off from the south, and an evacuation corridor has been established, connecting the north to the south to enable, those innocent civilians to evacuate to the south, where Israel has, designated as the area which all civilians should go as it embarks on its mission to wipe the Hamas leadership out of, the Gaza Strip. With the US National Security Advisor Jake Sullivan telling CBS News that the US does not want to see firefights in hospitals where innocent people are receiving care. And this has been the kind of international message, really, with so many nations now even calling for a ceasefire on, the operations within Gaza, as a result of this kind of demand for less civilian casualties within the conflict. Because as we do know, according to Palestinian health officials, linked to Hamas, of course, there is, reports of even over 10,000 civilians dead within Gaza, which obviously is extremely sad and poor to see. And, these kind of secondary effects of conflict obviously have great ramifications for civilian populations in such dense areas such as Gaza, and that's why we're seeing such an international kind of call for ceasefires. However, Israel is responding to that kind of message with, these people are holding over 200 of our civilians as hostage. They massacred over 1,000 of our civilians. We're simply trying to take them out of their leadership so they don't, commit these terrorist attacks ever again. If any of your other countries, kind of experience these same attacks, I'm sure you'd be doing the same. So it's kind of a tough situation to balance for Israel at the moment, as we can see. And this, obviously is reflecting that wider international alarm of conditions in Gaza's full hospitals, because as we do know, these hospitals now are becoming a massive refuge for civilians, not only seeking medical care but also seeking kind of that protection, because hospitals are less likely, at least, to be attacked. Now the terrorist group Hamas has said that there's been a catastrophic shortage of medical goods, with a hospital in Gaza City being forced to close due to running out of fuel or power. And this is obviously following Israel cutting off the power during its siege of Gaza City, and it's cut off power, water. There has been some breaks where that's kind of opened up temporarily, but Israel primarily doesn't want to be giving these supplies to what they believe are terrorists embedding themselves and preparing to defend against the IDF. Now the terrorist group Hamas has said that there is a catastrophic shortage of medical goods, especially within Gaza City and their hospitals. And obviously Israel's reply to that is, this isn't, you can't, say this when you're also storing a lot of fuel and a lot of medical goods for your own militants. Now, a hospital now, according to the UN, over half of hospitals in Gaza are closed, and the rest only provide very limited services. And this is, as a result of that lack of power, electricity, and water that we just commented on. Now, these inner city battles are the latest stage in Israel's ground offensive against Hamas, which obviously comes following Hamas's massacre on October 7th, killing 1,400 civilians and taking 200 hostage, it's believed. Now, yesterday, Hezbollah on the Lebanon border did fire missiles once again into, an Israeli village, with IDF troops also wounded in a cross-border mortar fire, responding with artillery as well. And at the same time, signs are emerging of another potential hostage deal brokered by Qatar. As we do know, tensions are rising and, have been at a significant level on the Hezbollah, border, so the Lebanon-Israel border, as well as in Syria, where there's been, constant skirmishes and, kind of indirect fire at, the troops on either side. And the worry is that Hezbollah would invade Israel. Hezbollah has over 50,000 troops, well trained and far better supplied than Hamas, as Hezbollah is a Shia funded group by Iran, and therefore has a lot more supplies, intelligence, and training to take on the IDF. So that's the key worry for Israel, of course. Now, that's all to talk about on this topic. Keep your eyes on it as the humanitarian crisis does grow larger and the battle rages on within Gaza City. Any escalating tensions here obviously will have a great effect on wider markets, especially gold and oil, as we will see at the end of this video. So make sure you stay around to see that. Next to talk about, though, is Iceland declaring a state of emergency as it braces for a volcanic eruption. Now, Iceland has declared a state of emergency following earthquakes, raising fears of a volcanic eruption. As of course, when magma is rising within the volcanoes, earthquakes and seismic activity begins to occur as a result of that kind of pressure building up and magma moving through those chambers within the volcano, with this having the potential to damage residential areas for the first time in 50 years. Now, 4,000 residents have been evacuated in the southwestern town of Grindavik, and the seismic activity has rocked the peninsula, home to Iceland's international airport, with Iceland having a long history, of course, with volcanoes disrupting life, with several occurring on a smaller scale close to Grindavik in recent years. So obviously this isn't kind of a new rodeo for Iceland. Obviously they battled with many, with larger ones occurring in the 1970s, and the most recent large one, which affected the wider kind of community of Europe in particular, which is why we're kind of highlighting this, is because it has the potential ramifications, especially in affecting wider Europe. As in 2010, I believe it could have been 2011, the Aeolical volcano did erupt, and I don't believe it caused many, or if any, civilian casualties, but the kind of fumes that went up into the atmosphere, as well as the kind of glass shards which were formed through the eruption, did shut down international travel within the European continent for many days, causing and having great effects on airline stocks, and as it did affect their profits, of course, as planes weren't able to take off. So this is why this could be something to note, as it could affect those airlines once again, as they did before. Now these eruptions are, while sometimes damage residential areas, are often unlikely to cause a loss of life, with flights into Iceland's main international airport continuing despite the risks. Now, experts said that the eruption could happen at any time, and the current seismic activity made such an event likely, but not guaranteed in coming days. So keep your eyes on this, and any effects on wider regional travel within Europe will have a great effect on airline companies. So that's why it's so important to keep note of. That's all to talk about on the articles. Next to talk about, of course, is the charts with US indices testing resistance. As we can see here, last week we saw actually quite a lot of kind of ranging motion for US indices. After the week prior, we saw that great bullish momentum pushing the US 30 in particular here, all the way from this level here up into this strong area of resistance around the 34,000 mark. And this, obviously, as you can see here, has now seen a stagnation, as this kind of strong area of liquidity is obviously acting as a strong area of resistance. We did come into contact with this trend line, which we then saw as quite significant, because it was reacting to it 3 times arguably, but now it does seem that we've kind of broken just above it, and almost tested this double top once again. The bar didn't close above this prior high. We did wick above it, so this could just be a false breakout, and we may now return back below, which is why any US economic data going into this week will be so key to understand, to shape the way we understand the US market going into this week. That's all to talk about on US indices. Keep your eyes on this, as we are in this strong area of resistance following that bullish momentum last week and the prior week. Next to talk about, though, is the dollar, which has now reached this 50% Fibonacci mark, where we know there's a strong area of liquidity. It does seem that we're seeing a kind of sell-off movement from that area, so we could say this is a very significant area to make a sell. As you can see here, it is a very strong area of liquidity, acting as support and resistance many times prior. And now prices kind of edged its way back up to it. It'll be interesting to see whether this will now be the liquidity dollar needs to take a move to the downside and move further, as since end of September, dollar has been ranging around this area, trying to make moves to the upside, then trying to make moves to the downside, then trying to make moves to the upside. But then we did kind of break below that range, and now we're seemingly retesting that range a bit before having the possibility of moving lower. So this is why dollar is so important to keep your eyes on. Next to talk about, though, is Euro USD, which has now tapped this strong area of liquidity and 38.2% Fibonacci area, which is why it's so important to take note of, is because we are in this kind of bullish channel, it does seem, where price has been moving up for some time now, following this kind of overall bearish move. And now the question is, will price finally use this liquidity for a strong move to the upside, as price has been continually kind of tapping this area of liquidity and 38.2% Fibonacci area, but failing to take a move significantly to the upside, just as a result seemingly of lack of momentum on the buy side. So definitely keep your eyes on Euro USD. Next to talk about is pound yen, which is now seemingly forming a range after kind of getting once again back above this trend line and, you know, once again tapping that 38.2% Fibonacci area. If we do draw out, you know, a kind of support liquidity level, you know, this is now forming a sort of range on the downside. And on, you know, the kind of resistance side, we are also kind of forming a range. So it will be interesting to see whether price will continue to kind of hover around these areas and, you know, may even make a move somewhere. Sorry, I'm just gonna, you know, it will be interesting to see whether price can move from, you know, one of these areas of liquidity to break out this range or even continue moving higher. So definitely keep your eyes on this. USD JPY is continuing that strong sign of bullish momentum after seeing great volatility within the past few months. You know, after coming below this 78.6% Fibonacci area, we have seen great bullish momentum, you know, throughout the last week. So it'll be interesting to see whether we continue that going into this week. Next to talk about though is gold, which has now hit this very significant liquidity level, which I did highlight last week. You know, we were talking about how once gold had broken below this channel, we were looking to see gold go further down to this area of liquidity, and we have now seen that, and price did slightly react with it last Friday. The question is now, how far can we go from this area now that we've reached this strong area of liquidity, this strong Fibonacci area? Whether the fundamentals you know, line up sorry, with the overall technical picture on the charts will be the question to see whether gold can, you know, continue to new highs. So definitely keep your eyes on this as the story does develop. Lastly to talk about though on the charts is Brent crude oil, which obviously last week, after hitting that $80 a barrel mark, which I did highlight last week as a very significant level, you know, reaching that level has acted in a, you know, has caused Brent crude oil to react in a very significant manner, as we can see here, taking a significant move to the upside. The question is now though whether this is simply a retracement and we will continue to see a move to the downside. So maybe after we hit this 38.2% Fibonacci area, maybe that will be the retracement over and price will continue to the downside, or in fact this could be the lowest level for some time in the future now. And, you know, if, you know, fundamental kind of messages do line up, we could see, you know, Brent crude oil really move to new highs, because obviously, as we do know, any regional escalations within the Israel-Gaza conflict could cause, you know, spikes in oil prices, and as a result cause Brent crude oil to move very, very high. So definitely keep your eyes on this. Lastly to talk about though is the economic calendar, where we do have quite a bit of data coming out this week. So firstly, we have, you know, the UK's unemployment data, as well as, you know, normal employment data. As well as that, we do have the Eurozone's GDP growth rate, as well as German economic sentiment. That'll be interesting to see, you know, coming off the back of that German home building article that we talked through. As well as that, we do have US core inflation data. That's some very, very important data. You know, the general US inflation picture has such a great effect on, you know, the US's monetary policy. As we can see here, the core inflation rate, which is the one that's mostly looked at by the Fed, is forecast to be at 4.1%, which is the same as last month. Core inflation has been sitting around the same sort of levels, so it will be interesting to see whether core inflation will be around that level. Keep your eyes on that and listen out for that. So as that, we will also get, you know, the UK's core inflation levels, as well as, you know, normal inflation rate, along with the Eurozone's inflation rate as well. So lots of inflation rate within the biggest economies, trading economies especially. So as that, we do have, you know, Japanese GDP growth rate figures coming out, along with US producer inflation and retail sales data coming out, along with Aussie unemployment rate, as well as, you know, the US building permits figure coming out as well. So lots of data coming out this week. make sure you listen out for all of it, but especially the inflation data that we will see, along with the unemployment data. That's all from us at Wildwood Capital. Hope you have a great trading week. Get into it this week. Have a great one. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.